What's up, everyone? Oh, jeez, I have my voice. There we go. All right. Load some stuff. All right, can everybody see the screen and hear me okay? Before I start talking myself, per usual. Jules, you get up here. Come here. Okay, Jules, that's okay. Yes, good, good, good. All right, hold on. Let me get coffees out of the way. Here goes now my issue. I didn't eat anything. Hold on. You want to come up here? Come up here. Get your dog. Okay. What's up, LT? Drew, Sherry, Tobias, how's everybody doing? You guys having fun? In bull mode? All right. My bag? You got nothing but money. You complain, LT, with two loaves of bread one under each arm, and you complain. All right. I'm just going to breeze through a couple of things, talk about a couple of things, because especially in the summer, a lot of people listen to the recording. They got better things to do than us degenerates, especially after a close of a day of the market. But so I'll just breeze through a couple of things I wanted to share with you guys, and then we'll talk some shop. We'll go over. So we got some names to talk about the last few weeks. That's always a good thing. Um, and I just get everybody up to date with some of the big picture stuff we've been following. No major changes there, but a lot of you who know me, okay, it's funny because I get thrown into the perma-bull camp, right? That's a lot of people throw me into that camp, but you guys know that at times, right? I mean, I don't. When I get bearish, I'm not betting against equities, right? I've learned early on by experimentation from others around me to try to stay away from that. But the point I'm getting at, a day like today, um, these are the days that get me a little nervous, and I'll tell you why. The reason why, if you remember, for the last few weeks, I told you the ideal situation. Well, before I start, I got this up. I didn't even do it very quickly. We're running. We got a new sponsor for the Flow Show webinar, the weekly webinar we're on right now. Centerpoint. So anybody who's interested, we offer some pretty cool promotions that again may be worth your while if you have any interest. Let me put the link. Hold on, because we actually got decent feedback from this. So let me before I forget, because I'm notoriously known for that. That never works, does it? I think you could probably just copy and paste that link anyway. But yeah, we run promotions for with Centerpoint, with Steamroom, with the Lucci Master Course as well, half off the Master Course. So some pretty cool things. Click on the link, and you'll have all the information there. You can track down anybody, Matt or Norris or anybody from the Steamroom. If you have any questions, just let us know. Okay. All right. So what I was getting at is, if you remember what we spoke about, I said the ideal situation, especially with the action picking up in individual names, right? Um, the consensus out there, right? The perma bear line of the current time was a lack of breadth behind the rally, right? There was only 6 stocks that were going higher every day. They severely would exaggerate things to make the current rally seem as bearish as possible. Okay, and we went over a couple things showing that breadth wasn't ideal, but at the same time, it doesn't necessarily have to be a bearish thing because a lot of times, rather than just sell mode taking over because of a lack of breadth, the buying can spill over into other things, even gradually, and that could be extremely bullish. Okay, especially for a rally or bullish phase to live on. Okay, so we got if you were looking through a bullish view, right, and you wanted things to pan out in this bullish phase to continue, we got literally exactly what you would want. Okay, we got a little pause in some of the larger stuff out there that really took a leadership role in this recent rally, and the buying did spill over into several of the things. Okay, from cyclicals, industrials, transportation names, and even for those of us who like to play those under the radar type equities, some even unusual activity in some of the small cap, micro cap names, underbelly growth names. So it really, for stock picking purposes as well, really opened up a lot of other trading opportunities, right? Because you don't want to keep, as we say, climbing up the ladder in an Amazon or an Apple, which goes up every day, and you're trading the same names over and over and over again. Okay, because the problem with that is you never know when that momentum is going to stop, and you get caught. But if you continuously see fresh buying and new names, new setups, that's a pretty good indication that the risk appetite out there is healthy, and that this bullish phase or rally has more to go, right? So we discussed that. But what I've experienced from these type of climates is the last thing you want is to run into a period, a day or a couple of days, whatever it may be, where the indexes, the larger names start to work again, right? Start to outperform again, I should say. Because they weren't selling off. They were just kind of in a little digestion phase, right? Chop, in a sense. And today we kind of got that type of action out there, meaning if the Nvidia new highs, Amazon had a big day. You can even see some of the more speculative stuff like crypto names, even though they've been hot, kind of under the radar because Bitcoin hasn't been doing anything. And we've been seeing these crypto miners, as we've been talking about, just getting gobbled up by sweepers left and right for the past few weeks. Today, it all came to a head, and it almost becomes obvious to everybody, right? Gets everybody's eyeballs on it. And when that happens, right, the reason we don't want to see that is because you lose a lot of that skeptical sentiment that continues to provide a bid in the market, right? Just think of it logically. When you have 2 or 3 days where the indexes rip higher and the big names are behind that rip, every Joe Schmo who pulls up a screen is going to be aware of that, okay? But like we were experiencing over the past couple of weeks, if you have the indexes chopping around and Nvidia frustrating people because they're expecting higher, Amazon was frustrating people, and every little was getting eaten up in the stock, okay? But this price action, you go on Twitter or stuff like that, social media, you could sense frustration by this little digestion here. Okay? So you as bulls, right? Like I said, if you want this bull phase to continue to go on, you'll take this all day long. You'll take the indexes, chop around, and not really finding any follow through momentum, while underneath the hood of the market, they are picking up names left and right, right? Especially laggards that haven't participated. And if you guys notice, we've been paying attention to this, right? Because this is the equal weight S&P 500 as opposed to SPX, and this is almost a better depiction of the overall market, right? It's equal weighted each of the S&P 500 companies instead of just the big names that were carrying the market. And if you remember, we looked at this, and again, take away the last couple of weeks, the market really as a whole hasn't done anything, right? Was still in that range and really hasn't even moved as some of those big leaders were carrying the SPX higher. Okay. And you can see the difference now, right? This thing now is towards the top of the range here now. Okay. And that's because of that better participation. So, again, it's just as simple as the stuff that everybody is looking at to trade or to get a gauge on whether the market's bullish or bearish. When that stuff is not doing anything, but the rest of the market is, to me, that's ideal for the way a lot of us like to trade. Especially, listen, if you like to play individual names, if you like to trade individual names, you'll take that every day of your career over the indexes moving higher with everything else. Okay. And it's no coincidence now, right? Sentiment has pretty much been at bay. Okay. There's been a lid on sentiment while the indexes and some of the big names were digesting, even though, like I said, Bitcoin miners were taking off, underbelly names were ripping all over the place. Some of the industrials, the cyclical names were getting hot. Now we're at a point here where sentiment on a short-term basis especially has been heating up, okay? And that raises the risk of some sort of pull, some sort of rinse, okay? Now, that doesn't have to show up immediately, and it doesn't have some remote control on the price action, okay? But if for whatever reason, if there happens to be some sort of headline, some sort of news, some sort of earnings guidance that rocks the boat a little bit, that could create, and I'm talking over the short term here, more importantly, right? Because it's a waste of time to go forecast 6 to 9 months out, but on a short term basis, can create some volatility in selling. Okay, so that's, again, everything in this game, in this market, is probability, right? There's no certainties. If you hear, and something else we've discussed ad nauseum on these webinars, you hear anybody, right, who preaches to you or talks to you in certainties, you don't walk in the other direction, run. Okay, there's no such thing. And a lot of times when somebody does have that much conviction about a feeling, right, of a market, it usually is wrong, right? That's how the market works. Right? Some of the best trades are trades that you don't expect to do well, in a sense. Okay? So we have to look at everything in probabilities. And right now, what has happened is the probability of this market finding some selling based off sentiment and positioning, that probability has gone up. Okay. Now, at the same time, think about what we just went through. Okay. Literally, every single thing, okay, every single almost like binary event, whether it was economic data, the Fed, CPI, liquidity, you name it, you couldn't draw it up any more bullish than the way things panned out. I mean, just look at today and yesterday. The CPI and the PPI, you couldn't draw it up any better than they came in the last 2 days. Right? You couldn't draw it up any better. Now, we all could have We could have taken shot forecasting these things. We might have had a hunch. We might have felt good that the CPI was going than expected. We didn't know for sure. Okay, for all these things, but every single one of them landed in the Bulls column. Literally every single one. You look at, and we look, I don't have one handy, and Twitter search is down the toilet bowl, so I can't even use it. But you remember we looked at the economic surprise index for the U.S. and how not only has it been bucking the trend from the rest of the world, it almost looks like a stock chart heading higher, right? Literally went up almost in a straight line um, over the last few months. Okay, so again, that's not stuff you can really predict. But when everybody is expecting negative negativity, when everybody's expecting recession, when everyone's expecting, oh, the Fed has to be hawkish now, or and they all go the opposite way, you're going to get some sort of bullish reaction, right? You're going to see exactly what we've been seeing. All right. So now, a day like today, and again, just as a whole of what we've been seeing, what it does, it starts to change those expectations. Right? That's what price action does. Changes sentiment and changes those expectations. So those expectations go from extremely negative to now, okay, they're still negative. Now they start to flip positive. Okay. And that's what adds that risk into the equation. Okay. Because now if one of those things go the wrong way, instead of buyers into that dip because everybody was expecting it, you can see additional selling. Okay. The good news is we just passed CPI, the PPI, the Fed, all that nonsense. The bad news is we're going into earnings season. Okay. And you have a lot of pretty strong run-ups in a lot of these names into earnings. And very easily, you could see companies report okay numbers and still sell off on that news, right? But the main risk is if guidance or those numbers are bad, that's where things can become a problem. All right. So that's kind of where we're at now. I'll talk about though how, and we talked about in the Steamroom over the last couple of weeks, especially on the Sunday webinar, how I don't think it's a major problem for us. Okay, I still think as long as we're seeing that appetite out there for individual names, I still think there'll be a good amount of trading opportunities. Okay, the difference is we're going to have to be really, really careful and patient to try to allow things to come to us, right? And we'll spend some time on that. I just want to breeze through some of this stuff before I get to it, just to catch you guys all up to date here, okay? All right. So because I don't have Twitter search, I just pulled some of the things that you guys usually ask me about to see, right? So this is some of the big picture stuff, okay? We talked about our credit market signals, right? Instead of us trying to figure out if a recession's coming, instead of us trying to figure out if the regional banking saga is anything to worry about, we allow supposedly the smartest money on the street, the credit markets, to do the work for us. Okay? We don't want it to predict anything. We want to react to what they're signaling to us. Right? We spoke with that. We want to react more instead of try to be proactive and predict what may happen. Because it's impossible to predict how any of this is going to turn out. Right? We got a perfect example. Some of the smartest minds in the world, okay, looking for a recession or looking for the Fed to continue to tighten or inflation to remain sticky, you name it, and have gotten it completely wrong. That's not a knock against them. Right? Macro is tough shit. I don't know anybody who trades successfully just based off macro theses, But when macro is on the forefront, when it's that much of a concern, which it has been throughout 2022 and now, you want to take a more reactive approach instead of try to predict how things may shake out, right? See what the reaction is, see how players are positioned, and react to that. So basically here, the credit market signals have been signaling to us that the real money's not worried about a recession. They're not worried about anything right now. Okay? So that gave us a green light, at the least, to do some stock picking in individual names. All right? That was our interpretation of it. And that's exactly the message to this day. Okay? Another thing we're keeping an eye on is if this completely rolls over, because that would be signaling to us that there's something else going on, but in a bullish way now, meaning there's a Fed put at play. Okay? If the probability of default in the credit markets rolls over, okay, what's that telling us? That when you see that happen, usually it's off QE or the Fed backing whatever is in trouble. Okay? Again, we talked about that that banking program that the Treasury off the regional banking nonsense. Maybe it has something to do with that. It solved that problem. Who knows? I don't know. But right now it's telling us everything. Nothing is a problem to this day. We can still look for opportunities in individual names. And if this rolls over completely, you're talking about the invisible Fed put at play. All right? So no major change there yet. Sharpies, again, that's another kind of big signal thing we look at. This is the sharp money in the futures market. They usually take the other side of either hedge funds or the more speculative riffraff money, as we call it. They took the other side of hedge funds recently. Hedge funds have been aggressively short. The sharp money, which is this right here, has been aggressively long, as you can see. They've been taking down that long exposure as this market has lifted the past couple of weeks. But they are still long and nowhere near slapping on hedges aggressively yet. Okay? And that's not even a bearish takeaway. That's a normal takeaway, right? We talked about that. What's not normal is for them to remain aggressively long like they have, even as a market is well off the lows. And the reason they've done that is because the hedge funds have been stubborn and have held on to that short position a lot longer than you would expect. Hedge funds right now are still short. They have covered a chunk of that position. Okay? We're going to get another update tomorrow. We'll see. You had the holiday last week, so not much to talk about there, okay? Here, this is hedge fund exposure in single names, okay? So hedge funds were aggressively short in the futures market, and they had no exposure in regards to individual names. It wasn't like they were hedging long positions in individual names, okay? They had no exposure, literally zero exposure, okay? So what you could see of recent here, they've been adding, as they've been covering that short in the futures market, they've been adding exposure in individual names. Okay? And they have a tendency to do this, right? You could see they remain stubborn, and then in a week or two, boom, 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 they go from short to all in sometimes. Okay? So this basically now, you could kind of say this is, there's no signal from this anymore. Okay? The logic was they would start to chase. We're seeing it in the flow every day, right? You see these deep in the money calls in the big names every day. You see 3-4 sweeps that are $3, $4, $5 million. Who do you think that is? You think that's the guy around the corner from your house? You know? So the hedge funds, they need to get exposure as quick as possible because they have none. The quickest way to do that is to sweep calls in the option market and utilize that leverage so you have some exposure into earnings season. And that's what we've been seeing. All right. So that was, again, that's what you look for into, especially into earnings, right? That's where it usually ends up happening, and we have seen that. So this now, yes, they could get to a point all in, as we say, right? So you would see a big spike, and you'll see it up here, kind of above this red line, would mean they're aggressively long in individual names. That's certainly possible, but that would be, that adds more risk to downside, right? As you can see, they usually, when they long, they like to catch them, right? You can see this particular example at the end of 2021. It almost like they got forced in to get aggressively long, and boop, that was the top of the market. So it doesn't always lead to some dramatic pullback, but usually leads to some sort of healthy wash if they do that. Okay, so that's the only thing we'd be looking for out of that indicator. I pulled this up because I don't even know if you guys make it out, because this is what kind of we've been discussing. We spent some time on, I think it was a webinar or two ago. This is from Stifel, but are they making the point here that supposedly this is not supposed to go into a Fed put QE type situation, right? The Fed has been pushing higher for longer. They've been pushing how they want to keep financial conditions tight, okay?
You there, man?
They got, plain and simple, in simple English, they got scared, right? We talked about that. Last October, literally the lows, because of what happened in the UK bond market and a few other things, they took the foot off the brake. They stopped rigging the game, right? They stopped tightening financial conditions and liquidity because they were concerned something major was on the verge of breaking, all right? And that's what we see across the board. Financial conditions, you see it in the credit spreads and swaps market. Stifel's making the point that financial conditions have loosened, but they're likely not going to continue to loosen further as if the Fed is implementing QE or pumping liquidity into the system.
Jay, can you hear me?
That's what should happen, right? And it goes back to this chart here that we were looking at earlier, okay, and that we spoke about. This is not supposed to roll over here yet. Okay, there's no reason for this to roll over, right? The Fed doesn't need to backstop anything right now, right? There's nothing to our knowledge. There's not enough damage out there that the Fed is on the verge of implementing QE, cutting rates, and the Fed entering the equation again. Okay, so what's likely to happen, and this is Stifel's point, is that this becomes the bottom of the range. Right? And you see some chop out of these financial conditions, credit swap indicators. Okay? So if that's the case, right, if that's the way things play out, things are likely going to get a lot choppier from here. Okay? Doesn't necessarily mean it's going to instantly be something extremely bearish, but if you have financial conditions start to tighten up a little bit from where we are, okay? Credit default swaps start to widen out a little bit from where, again, if you're just in this 400 to 500 range, okay? While that tightening is occurring, you're going to it's going to weigh on equities a bit, right? And the main takeaway is that you don't get that QE-induced runaway rip in equities. Okay, that's what's not supposed to happen. Again, we don't want to try to forecast whether that's going to happen or not, but we want to pay attention to whether that happens or not. You understand the difference? Okay, for me to say, "Oh, this is not breaking down here. No way is the Fed." That, for me to position myself or to have that bias and come in every day is one thing, and that's a problem, okay? But for me to expect this not to break down, but if it does, I can react. You understand? I'm a lot looser and open-minded, not thinking I know anything about this shit, right? So that's what we're keeping an eye on. But the graph I showed you here with Stiefel, they're calling for a more range-bound market. They've been bullish, literally from the October lows. It was a great call, just based off they didn't think the Fed could tighten anymore because they would break something, and that would be purposely. Okay, so it happened to be a good call. Now they think that the financial conditions aren't going to loosen much from here, and that likely will bring some chop and volatility back into the picture. All right, and you could what he's showing here is the overlay of financial conditions and the S&P 500. Okay, and they're extremely highly correlated for obvious reasons. You know, it's not some kooky indicator, right? If financial conditions, if the Fed is greasing the system and loosening financial conditions aggressively, obviously risk assets, which include equities, they're going to do well, right? If the Fed is going to rig the game to try to take down inflation by tightening financial conditions aggressively, that's going to weigh on risk assets, including equities. So that's all this shows here. It's not some magic indicator. What else I got here that I found interesting? Oh, this is why. Right here, what this is showing is just money out there, money that's gone into money market. The raising of cash out there. Okay, 2022 was remarkable, right? We talked about how hedge funds, institutions, mutual funds, they literally, from the first day of the year all the way up until recently, have been raising cash, right? So you got a ton of cash out there, right? To this day, a ton of cash. That doesn't mean it all has to come back into equities. It usually doesn't. Even in bullish times, it usually doesn't, right? But what that's likely to do, and what we're likely to see happen off that, is that dips and pullbacks are likely going to find buyers unless there's some sort of credit event, right? Unless, again, going back to those credit market signals, unless we see swaps start to widen out and blow out aggressively, right? Which is telling us there's a credit event, something's broken out there, okay? The likelihood is if you get some bearish price action that results in a pullback, there's likely going to be some of this cash that wants to be put back to work, right? So that's kind of, that's kind of what we've been playing off of for a while, and I think it's important to still keep in mind, okay? If our credit market signals, which know a lot more than us, is not telling us there's anything major to worry about, we got to look off any pullback as an opportunity on the long side, regardless of our time frame, right? So, and I think that's a really good thing in general, even if it doesn't mean the indexes rip to new highs and continue higher, right? We talked about it. We could be literally in a range-bound market, okay? And with that playbook and that approach, still find success, especially in individual names, okay? As opposed to 2022, where the Fed was slamming on the brakes, rigging the market to the downside, and there was zero opportunity, even off pullbacks, okay? So that's what I think we got to continue to remind ourselves. Even if we do get some selling, we're likely going to get some selling at some point, right? I think we're closer to that even now because of bears just being squeezed out. But when we do get it, right, regardless, I think it's still a good thing. It's not a bad thing unless we get indication from our signals that there's a problem out there. Right? So that's where this cash thing, I think, will be put to work. This is futures positioning as a whole amongst professionals. You got asset managed. There's a bunch of different ways people measure positioning in futures. I think this is levered funds and asset managers. But here, same thing. Into the October lows, you could see how aggressively short they were. Okay? And now they're back up to here. Right? So that pessimism, right? That bearish positioning and sentiment out there, that expectation of just negativity, is starting to we're starting to lose that, right? Each and every week that goes by, and especially days like today, that's why I get, I just get a bad feeling of days like today, and we have had enough of them, because this is what you see happen off those type of days. You see bears give up, and they've been stubborn. Now, the good news, okay, is that any little weakness will likely reel bears back in. You understand? If, let's say, next week on Wednesday, you get some headline or earnings or Netflix shits the bed off numbers, whatever. Apple warns. I don't know what can happen, okay? But whatever it is, if that creates selling, it's not going to be too long before those bears wake up again, right? And think that, it really was a bear market rally, and we're going to go break lows, and this is the disaster we've been waiting for, right? So it's good when it's not too far away, because they can keep coming back, and that's what ends up supporting markets, right? So I still think we have that luxury right now, okay? But again, the longer you go without some sort of healthy rinse to reel bears back in, you lose them for longer. This is seasonality. Goldman, who is this? Tactical Flow of Funds had this, which is interesting. July is known, I think especially in the election years, to get off to a decent start, right? We were in a pretty strong spot seasonally, okay? Then what happens as you get towards the end of July, that's when things get a little choppy, rocky, and brings in August, September, which somehow, some way, there's always a problem, right? So we kind of had a runway here where you get through CPI and you don't have any major earnings yet. You have the banks, which nobody likes to begin with, but you don't have anything that can rock the boat yet. So you have room for further bullish momentum, but then you get into a period where getting the blackout, the buyback blackout goes dark, right? Buybacks are out of the equation. Seasonally, it's usually a tougher time, and the risk of earnings season. All right, so we kind of had a little runway here that's closing. So, well, again, I'm not a big seasonality guy, but it just lines up well with everything else we're seeing. And that's it, basically. That's as far as big picture and stuff that we talk about continuously on these webinars. Again, there's no drastic change, right? Each and every webinar that we meet here on Thursday, each and every week throughout this bullish phase, we lose more and more of that bearish sentiment that we have had. Then it converts to bullish, and now we've been tacking on top of that as well. So as that happens, more risk starts to enter the picture. It's going to be interesting to see what hedge funds look like tomorrow, whether they covered another chunk or not as far as futures positioning, because they did add to equities recently, individual names. All right. Anybody have any questions on this stuff? Again, nothing new, pretty simple. They all tie together, right? It's positioning and, signals from the credit market, which come from the Fed, plain and simple. Can I please repeat what? What do you want me to repeat? Oh, you talking to somebody else or you talking to me? Sherry. My screen sharing has been off? What's that mean? Why is my screen sharing off? Oh, I'm just showing that screen because I have other windows? You gotta be kidding me. Why is that now? Let me see something. Hold on. Are you kidding me? It's always something with this. I mean, it's literally every time I got a handle on this, there's something else. Stuck on Trading View, yeah, because you know why? I think I got two windows, but I did share everything. It's amazing. It's amazing. You know what I think about Zoom? I think Zoom was just built for me, right? Any idiot can just share the screen and do nothing else. When I have to figure out all these buttons and know what the hell I'm doing, like where's the share button on here now? I don't know. I can't, hold on, but I want to show you the top bet list too now. Leave, stop. This sucks. And you guys have been seeing this, just this screen the whole time from the beginning? Jesus Christ almighty. You need like tech support to run a webinar on these things. Listen to my words now, but there were a couple charts I wanted to show you guys. What are you gonna do? I mean, most of you have seen it, especially you members, but that sucks. I apologize for that. All right, let's talk. We'll talk some names. I can't show you the top bet list, but I'll pull up some names on the charts here that caught some action. A lot of people traded this thing and have been trading this thing. Shop, right? We've talked about it numerous times on this webinar. Kind of was underperforming in a sense to some of the other stuff we've seen catch action, right? The shop flow was pretty decent, and it was kind of stuck in almost a range-bound digestion. And the last few days, like everything else, got a nice kick in the rear end. More action in it yesterday and today. Yesterday, you had 2025 leaps. Really good looking sweep there. I think it was like $1 million bet around there. And today you had a mixture of October buying and weeklies. A lot of people traded off the weeklies for a day trade. Anybody still holding the shop, or basically you guys have been trading this thing? Anybody, I'm just curious. Anybody gonna try to ride it out to earnings, or? Because now you got a little bit of cushion, right? I appreciate that, Dylan. Shop going to 80, LT saying. 80 by when? Earnings? Or you need earnings to get to 80? You're probably going to have to hold through earnings, no, LT? So this is the issue a lot of you are going to run into now holding some of these names. What do you do? At least some of these names that we like, the growth names, you have time. You have some decent time. But it's not a bad thing, because if you're up on it, it gives you more wiggle room. But what do you hold through earnings? You know what I mean? What do you hold through earnings? I think if you got some cushion, you got to roll if you really like whatever name you're in and try to milk a potential run up until earnings. If you see things start to act like you don't like it, you pull the plug. But you're probably going to roll to do that anyway. Usually till Netflix, you get a good idea of how some of these things may act. But see, the good thing is you have time on these things. They all report later on. But this was pretty active in the morning. This name. And what's interesting about this name is, it's more cyclical, right? More kind of like economically sensitive. It moves with the cyclicals. But the flow in this name has been jaw-dropping. You had risk reversals for September. Initially, they both were September. So if I could pull up the orders, I would show you. Hold on, wait, Casey, if I stop sharing, that won't end the stream, right? And then I reshare and see maybe if I could do it that way? Hold on, let me give this a shot. Stop sharing. Let me try this, hold on. Oh no, hold on. Share. Screen. Here we go. Boom. Now let me know if you guys see this. You see Twitter now? Oh my God, what an idiot I am. I must have just shared just the screen, not the entire screen. Unbelievable. Leave it to me. A ham sandwich I can F up. All right, so here we go. I got an updated version of this, though. There were a couple other names that I added on here. All right, so MGM, there were risk reversals in it initially. So in simple English, those of you who don't know the option terminology, they sold puts. They took the proceeds from selling those puts and they financed upside calls. All right, so they sold the puts, they brought in money. With that money, they used that money to buy calls. Extremely bullish. Okay? And the size of it was ridiculous. The initial order was like 10,000 contracts. So they sold 10,000 puts. It was actually more than that. 10,000 puts to buy 10,000 calls. Okay? So what they did today, initially, they came in with another risk reversal for 16,000. Right? So we thought it was just completely added on. But what they ended up doing, they sold that initial bullish combination bet and they rolled it into this. So they sold higher puts and they bought higher upside calls with it. Again, huge size, 16,000 of them. And you know what's crazy? You rarely see a roll, especially like a bull risk reversal, inside of a week that it got put on. But because this thing reacted kind of immediately, they had that luxury. All right, so this is a nice breakout for this name. MGM is usually a pain in the rear end. Doesn't really move much. Yeah. Exactly. They also swept a couple different lines this morning around that bull risk reversal. September's, did I put the September on here or the August? Let me see. Where is it? Oh yeah, so these are the same Septembers. They swept August, September's, so they were sweeping some other lines around it, call side. But really ridiculous action. Again, as the point I made earlier, not the type of action you're going to see from your average Joe. That's institutional action, hedge fund type action, right? Big money, usually a fund taking a position in a name. So that's the action we've been seeing in MGM. So these aren't really new names as per today, but MGM shop. The Bitcoin miners, guys, again, something mentioned in the room over the past week. We've seen flow in the Bitcoin miners, okay? But it's usually speculative type action, okay? It usually stems off of Bitcoin rallying, and they buy Riot, Coin, Mara, because it's a proxy on Bitcoin, okay? That's not what was been going on the last few weeks. Bitcoin hasn't done anything, and they have been gobbling up these Bitcoin miners. Okay? From Coin, Riot has been catching that institutional type buying. Okay? Riot blockchain, this piece of garbage. So what happened now today, you had Bitcoin news, right? Some of the crypto is not the security or whatever it was, on top of Nipple, going to trade options. So you had some Bitcoin related news. Bitcoin rallied today, and these things just went higher. They've been an ATM machine over the past 2 weeks. Look at this. Really incredible stuff. So today, look at what they were doing. This is just one order. There were 3, 4 of them. This is, what's his face's name? I keep forgetting his name. What's the guy's name? MSTR. What's that guy's name again? How do I forget his name every time? Sailor. Jesus Christ, the easiest name to remember. So that's his thing, right? They bought October 350s. October, I think it was 600s. Same thing. Look at the type of action in it. Right? Deep in the money. 2 million plus. And they all just ton of momentum again today. Look at this. Unbelievable. Unbelievable. And we've seen them rally, right? We've seen Bitcoin get hot. Like, look at this rally back here. So it's not shocking that they've rallied. What's more shocking is the type of flow that's come into it. And GJT nailed it, because I couldn't figure out why these things in particular would catch institutional buying. But because of the ETF, right? They're looking to come out with these ETFs. They got to buy these things up. And now I don't know if it's rumor or if it's true now, but there was chatter that Vanguard was buying up these names, right? I mean, honestly, listen, Bitcoin, I have no idea where it goes. I have no idea where it goes. I can't handicap Bitcoin. What am I going to do? Handicap it off a relative strength indicator, for crying out loud? But I'm just saying the flow in the Bitcoin miners has not been related. It usually is, LT, related to the price of Bitcoin. It has not had anything to do with the price of Bitcoin recently. So that's been, that's what caught my eye recently. Like, look, Bitcoin, it's kind of been just hanging around here. While these things of late, every day, we see crazy action in these things every day. And you know what else was cool about this Bitcoin miner rally? Some newer names that I never even heard of before. You guys know, right? Wolf with a U. Look at this. This is one I'm kicking myself in the rear end over this. At $1.60, $1.70, I couldn't buy some and put it in my back pocket. I mean, come on. What kind of piker am I? You can't buy a piece of bubble gum these days for $1.60. So you see these things catching action. I mean, it's stupidity. But yeah, look. Nuts. And Coin, okay, if you remember, you had some negative news around Coin when they started to buy these crypto names, flow-wise. there was negative headlines that came out. And you had you had coin. There were days where it would sell off, and boom, they come in with sweeps. You could have traded it red to green almost like 5-6 days in a row. Right, downgrades, a whole bunch of different shit came in that, just would create the stock to go lower that day, and then just allow these guys to gobble up even more. And then the last 2 or 3 days, they inhaled it. They were bombing this thing. Look at this move today. Crazy. So that's the story with the Bitcoin miners. Kind of hatched here. We'll see. Now the next thing to keep an eye on with these miners is when there's some profit taking, which there'll be at some point. Whether these real sweepers show up again, as opposed to weekly crap that usually is involved in this. We always see a ton of weeklies in these names. Yeah, see here, the market right now doesn't care what the Fed or anybody there or Powell has to say. The market is taking the outlook right now. Listen, as long as you don't break something, there's nothing you can do to convince us that you're going to put your foot on the brake again. That's basically the market's interpretation right now. Okay? That the Fed is out of the way. They're leaving. Remember we were talking about this, EU? They're leaving it into the market forces. Okay? And if something breaks, right? If all the Fed has done, if something ends up breaking, then they'll worry about it then. But worrying about what Powell might do, they don't care. They're ignoring anything they say. Completely. Because they don't think the Fed and Powell, they don't have the guts to slam or put their foot on the brake again after that pivot in October. They don't think they have it in them. And honestly, it'd be one thing if inflation was coming in a little bit on the hotter side, then, maybe you say, oh, wow, okay, the Fed might have to tighten again. Inflation's been going their way. So now there's no reason to think that. And then Bullard, oh my God, and then Bullard is gone now. So it's remarkable. Everything went the Bulls' way. Every little thing. It really is crazy. It doesn't always go like that, but it went like that recently here. This name is interesting to me. Anybody know anything about this name, ESTC? ESTC. Anybody, is this the daily? Oh, no. This is the area. Yeah. I agree 100%. When this ends, because nothing lasts forever. We know that. It's going to be really interesting. Anybody know anything about this name? So this is software, right? Now, this is an overseas name, or they just headquartered in overseas, the Netherlands of some sort? This looks interesting to me for one reason. It hasn't had a big move yet. Okay? It's in tech growth. And, you're seeing some decent action. Hold on a second. Oh, Jesus Christ. What is this? You're seeing some decent action come in. They bought, I think it was November's a couple days ago. And today, they swept it twice with some time. And I day traded. I usually don't day trade action with time behind it. But here's the November one today, 75s. And the other line, I think, was like August or October, one of the others. I have it on the updated list. But I would definitely keep an eye. In May, ESTC revealed AI. So what are you telling me? We got a little hidden AI play on it? That would be nice, huh? I definitely keep an eye on this, especially off any dips. Especially off any dips. Because, you get this red little sell off. Maybe even it lasts for the day. The next day they could snap it back. I would definitely keep an eye. And it looks profitable. I could be wrong, but it looks like this is a profitable name. Data analytics company delivers solutions designed to run in public-private clouds. I remember hearing there was a big short position in this. I don't know. Yeah, I'm just basing it off the action, guys, and it looks, the action looks good here. The action looks good. Earnings, the other good thing, earnings aren't till the end of August, the 24th, so you don't have to worry about that. Now, that's a lot of these names. That's the good thing, right? So I'll give you an example why I think it's a good thing. Let's say, for example, tomorrow, okay, you got banks reporting and the market sells off, right? These things may sell off initially with the banks, all right? And the way things have been going, oh, Jesus Christ. The way things have been going, appetite-wise, from sweepers, they're going to buy these things on dips up until earnings, at least up until the heart of earnings season with Apple and all the Microsoft. Yeah, so that's why I think earnings season could be a good thing, because if there is even some sell the news out there and some stuff, and it weighs on the overall market, it'll give you a little weakness to try to find some of these things to play. So names to at least keep an eye on, even through some warmer sentiment out there, which usually you got to be really careful about. ADSK, you guys know that name. This is a bet with some time. Could be earnings related. June 2024. This is June 2024, 300s. This also hasn't been as hot as some of the others. Kind of more choppy here. The same thing, you will probably want to wait for a dip because it's been up for 4 or 5 straight days. ENPH, that was a nice spot initially. That was worth a shot just where it was down here, So now you want to see off pullbacks. But that was a nice spot. Oh, here's a name I really liked off the action yesterday. Toast. A few of you know this name, right? Toast. This is software too. Toast. But again, we've been seeing action in this name for past few weeks. Yesterday, probably caught the top action of the day, as we were talking about. Today, more action. But yeah, that's the problem now, Ani, with a lot of these things. They all have had this move here, where you can see there's been some digestion. They had some decent spots on these things, on the underbelly growth, right? As opposed to some of the stocks that have gone, like Apple, haywire. But now we've lost some decent spots on these things too. Right? ENPH, that thing was basically at a new low. Right off a new low. So we lost that. You got some bank stuff here. They're reporting. So that's more earnings flow. CG. That's Carlyle Group. I'd watch that off earnings, if anything. This caught a little bit of action. Cheapish. But it is short dated. So you might want to keep an eye on it over the short term. A lot of you guys remember this from back in the go-go days of 2021. I think it's Brazilian FinTech, if I'm not mistaken. STNE. Remember somebody mentioned Buffett is in this name. I can't take it anymore. Was everybody going to call me up during my thing here? STNE is Brazilian fintech. Yeah, but does Buffett? Does he own this thing? I don't know. Am I thinking about something else? No, Buffett was in this name. Anyway, same thing, right? It hasn't gone too far, especially if you can get it down to. Here's our ideal situation here, okay? Early next week, you have a down day, and all of a sudden, sweepers come into that. That's it. Why do I say down day? Because, it's had 2 nice up days. Maybe, some profit taking, right? Wants to digest that. And if sweepers show up again into that profit taking, that could be the end of that profit taking. Plain and simple. Because, again, it hasn't had any huge run up. Or maybe even does something like this. All right? Kind of chops around, goes sideways a little bit, and then goes higher. So, name to keep an eye on. And July's, they're looking short term, so that's also cool. This is a materials name, MLM, court action today. This has been a strong stock. Yeah. All right. Everybody talks about just tech or just AI. That's all that's been participating. Look at this. This is a real name, too. This is a real name. MP sees flow from time to time. You know what I don't like about MP, Ani? It's a SPAC. So, I've been anti-SPAC. But MP could catch flow. We've seen flow in MP. But that's my main knock that I don't like about it. You got SPAC players in it. Because the reason I don't like the SPACs, you got bag holders in this thing who had it from back in the SPAC days, and these things went parabolic. They just got a stain on them. Maybe there's enough time now that's gone by where it's not as bad, I'm sure. But yeah, see, I'm similar, but staying away from SPACs have saved me a good amount of money over the last year and change. I'm usually the same way. I just buy the ticker. A lot of times I don't know what a company does. But if I know it's a SPAC, I stay away from it. A lot of shenanigans there. What else we got here? MDB. That's another good one. MDB. Look at this guy. You had some buying back here. Then you had this big gap up. I think it was off earnings, right? Yeah, off earnings. Had to breathe a little bit, and no sellers at all. But this thing is a beast, MDB. This thing's an absolute beast. And what they buy here? Let me see. July 4/10s. So this is short term. Because the thinking could be too that this quarter you're going to have people who want to get in for this quarter. I don't remember the news exactly, but I remember they got really excited off this quarter. High multiple stock, but they are profitable. They are profitable. So it's not some piece of garbage. These are leaps. We've been seeing a lot of these leaps. This has been red hot. Look at Zillow. And you know the thing is too, you see like a lot of these names, okay? All these names got priced for Armageddon. Literally. Okay? And if shit was gonna hit the fan, a lot of these names, and I'll give you two off the top of my head, Carvana, right? Rivian. If economically things panned out anything remotely close to the way people thought they were going to pan out, Carvana would be dead right now. Rivian would be dead right now. But they got priced for Armageddon, and guess what? Armageddon didn't show up. And now what's happening is people are becoming less fearful of that Armageddon type scenario, and you got short covering in a lot of these names. Yeah, doesn't mean Carvana is back and going to new highs or any shit like that, but you have a lot of shorts in this thing. Look at this, right? You see this? This is priced for Armageddon. Plain and simple, right? If Armageddon doesn't show up at some point here, you're going to get short covering. What's remarkable is there was no real short covering this whole entire trip down. I don't remember seeing that in the post-2000 NASDAQ bubble popping. Like things got hit, but I remember there were periods in between that post-2000 crash. There were bear market rallies where stocks were up huge, these things. It wasn't that easy for shorts to just sit in them and watch them blow up. So a lot of these things, they just whoop. They took them all down, right? The hockey stick. And now, economically, right? The economy's been resilient. People still have jobs. The Fed might be done. So you get some of that relief. But, net, look at this. It's, still a disaster. Right? It shouldn't have been at 380, wherever it was. Unless there was Armageddon, it shouldn't have been that. Where'd it go to 5? 4? 2? Oh my God, 3. So a lot of these names are just going to find an in-between somewhere. You know what I mean? Shouldn't have been here, shouldn't have been here. They're going to find a new price range to more than likely chop around for a while there now. Oh yeah. Listen, again, if a recession was here, okay, Carvana probably goes bust. They probably go bankrupt. But the economy didn't roll over as hard as everyone expected, nowhere near it. And the Fed took the foot off the brake already, where a lot of people were pricing in the Fed being tight for a long, long time. So you get these adjustments. Who knows now where that new level is? But what to watch on a lot of these things are trades. If you get dips, and if we see buyers come into that dip, there are trades in these things because they can move, right? So they could be traded. You don't want to bet on Carvana, the company, at this point. You want to trade it. Nothing wrong with that. So these, oh yeah, this is the top bet list. There's one, probably the best bet of the day is not even on here. It came after I posted that list. APD. Caught a good looking sweep. They don't have earnings till August. Where's the order? I have it over here. I gotta post an updated top bet list. August 300s. You know what? Let me just post. Is anything else on this list here? I think that's the only one. I'll just shoot it over here. All right. Twitter. Here we go. I can't believe for the whole start of the webinar, it was showing one screen the whole time. I mean, is that typical me or what? Like, you can't make it up. Here's the APD order. Look at that bad boy. August 300s, right? So here's the bad. I'll give you the bad because everything else is good. The bad is it covers earnings. So it could just be earnings positioning. Okay? That's the only bad. The good, aggressive order, size that this name never sees. I think this might open the largest OI position, if I'm not mistaken. $1 million bet plus. I mean, look how aggressive. If earnings weren't related here, this is the blueprint for what we call top bets, right? This is what you want to see. And that's an order you're looking for. It's just good looking. Right? Conviction, nice money, aggressive. Right? They swept multiple exchanges above the offer. He laid wood, right? He's not buying lottos. He's not speculating. He's laying wood close to the money. Those are real buyers. Right? He's not buying the August 400s or right there. He wants high delta. It's a good looking order. It actually came out with some news late in the day. I don't know if that news was anything of importance. Did you guys see the news I posted late in the day? So I don't know what that news was all about. The other thing that's good is, this is not a bad setup. Not a bad setup here. And the other good news is, look at these numbers. Okay? Look at this. They reported $2.74 for the quarter. What are they looking for this quarter? $2.91 for the quarter. What? Are you guys talking to me or? It's the one bolded in yellow red? Are you talking to me, WD, or are you talking to somebody else in there? So that's it. APD, nice looking order again. The only thing, earnings, you probably want to navigate around it. Maybe play an earnings run up if you're interested in that. But without earnings, and this is one of the better sweeps today. The ESTC, not a bad sweep, repeat sweep. But this was really nice. This was really nice. So let's talk about some names you guys are. First and foremost, any name you guys are playing off sweeper activity or flow that has piqued your interest of late? What do you guys? There's been I mean, there's been some nice moves in DraftKings, right? Caught that big Bova upgrade. There's been some nice sweeper activity there. What the hell am I doing? I'm typing into the chat over there. And think about like what we were looking for on a lot of these things are just buying off the little dips. There were plenty of opportunities. Name like Snow, right? Gives you these little dips to play off of. You don't even need the stock to really go anywhere if that's your strategy. You know what I mean? You don't even need it to go anywhere. Right? You buy dips where you see some sweeper activity, sell rips, keep the chains moving. Tesla, that's a monster right now. Look at this. That gives you these little breathers to play off of. Even tough stocks. Here's one. I know quite a few of you like it, but Intel, right? You don't want to buy this rip up 2 straight weeks into a niner. You get some nice digestion, and then you get some aggressive activity right here. Bink. Can't complain about that action. And same thing, these dips, you've had entries to play off of. You know what I mean? See, and the reason I say that, guys, because again, depending on your style, right? Like if you want to, let's say you think the market's out of hand here, or you don't feel comfortable, right? That means you want to be more tactical. You want to be quicker. You want to be nimble, more nimble. You don't want to hold, right? The more stuff you hold, the more risk you take on. So if you want to be a little more cautious, right, without sentiment here and all that stuff, you want to be able to trade. Ideally, when you're seeing this type of sweeper activity, you want to look for pullbacks, little dips on any time frame, intraday, fades. You want to look for pullbacks where sweepers come in and support that name. Right? The problem that we run into that's frustrating is you get hot names that don't pull back. You can't trade them, right? You have to chase them higher and higher. Okay, that's the frustrating part. It hasn't been that bad. You've had names, right? Especially recently, like Riot, the blockchain guys and all that, the Bitcoin guys. But you got an example like here, like you. Okay, right? Rip, you want a little consolidation with more action, you got it here. Rip, you want a little pull with some action, you got it here. Rip, you want a little pull with some action, you got it here. Right? So these are all trades. These are all trades. And that's if you're being extremely tactical, position trading, swing trading, as you guys call it. But even intraday, I mean, how many times coin, I know a lot of you guys like to trade. I just made the point earlier. There was like 5 straight days where coin went red, and then call sweeper activity came in, and it went red to green. I have not played this one. Because, when this thing gets going, it's gone. This is one of the examples where there aren't any pullbacks in it. Shop, they're all legit buys, Mark. A lot of the flow we've been seeing has been either hedge fund buying, institutional buying. It hasn't, like, again, what spec action looks like, right? A lot of 2022, the bear market, we would see spec action, especially into the bear market rallies. They would weeklies, cheap stuff. You see, and I don't put those on the top bet list. You know what I mean? Never, if ever, do I put those on the top bet list. You see what these orders look like. Even before earnings season. If you remember, last earnings season, Okay? I remember like it was yesterday, we had the discussion. We said we need to see some decent buying coming out of this earnings season. That's what we were looking for signs that this bullish phase can continue, right? There's an appetite out there for this stuff. And, there's been solid action since then. Again, the top bet list is the best way to measure it because I'm not going to put, you see any weeklies on here? You never see weeklies on the top bet list, ever. Ever. So later on, all I'm putting on the top bet list are top real bets. Sometimes, like what we're going into now, you have earnings involved, right? So that creates a problem. But I'm putting the real action on these top bet lists. That's the purpose of the list, right? The cream from the crop, to take away all the speculative action that's out there. There's no problem trading actively off that spec action. But the stuff you want to remember, are the stuff that leave a dent with some time. So, again, the quote unquote, is it real? All of this has been real. Otherwise I don't put it on this list. You can make the argument that it could be forced buying, right? Because what's happening, you got hedge funds that were caught empty-handed and they're almost forced to buy for those reasons we talk about all the time. But they're real buying, and even more so, Mark, if you see them committed, when another thing we've been seeing, right? Sahil, you and I have been talking about this for how long now? The put sellers. 2022, we didn't see any put selling, right? Hardly any. Now, there was a period, if I remember correctly, coming out of last quarter earnings season, there was more put selling than call buying, right? So, what that tells you is, like, okay, even if they don't want to chase, we'll sell puts. The stock comes down, we want it. Right? So it's almost like support. They're supporting dips. And as long as that continues, you have that buy the dip mentality in the market, where the buy the dip mentality is not around anymore is when they chase the same names over and over and over again. And you guys, we've seen that, right? Tesla, more Tesla, more Tesla, more Tesla. And we're not seeing MGM, SMCI, APD. We're not seeing any new names at all, right? You see the same names over and over and over again. If you remember one of the conversations we had, they were buying just Amazon, Google, Tesla, right? They were buying those names. We needed to start seeing the buying spill over into other stuff. Otherwise, it almost always results in a market correction. Always. Okay? What happened? There was a little bit of weakness. Boom. We started to see them buy all these underbelly names. Snow, You, Roblox, DraftKings. Yeah. So, it doesn't predict the future, right? That it doesn't tell us necessarily how long it's going to last, Mark, but while it's around, that's a bullish thing. That's what it tells us. It's bullish. What you usually see when things go sour, and there could be a reason for it. In other words, there could be something that happens that creates it. But when things turn bad is when that buying dries up. When that buying dries up. And the top bet list, you see now 2-3 pages worth of names. You see 1 or 2 names, right? Or sometimes I don't even post a top bet list. That's when, again, it doesn't mean a crash is coming, but it means that the appetite for risk is drying up. You know, that's a great question, a great point. The NASDAQ rebalancing. Okay, and you may not like this answer. Okay, and this is my answer for a lot of the stuff that we hear about, everybody talking about. When everybody is talking about the same thing, when everybody's concerned about the same thing, it's usually irrelevant. Okay? Again, that's from my experience, the God honest truth. Okay? We see it time and time again. Example, liquidity. Oh, liquidity. When the debt ceiling gets resolved, there's going to be liquidity drain, the Fed, liquidity. You go on Twitter, literally every night there'd be 25 different threads from, you guys know the names, I don't have to tell you, okay? Of here's why liquidity is a problem. Here's a thread with the little thread emoji. You know what I mean? You'd see it constantly. And when you see all of that, everybody talking about the same concern, just think logically. You think the market, if everybody's talking about it, you don't think the market already priced that in? You don't think the market's aware of it? So that's what I have to say about a lot of these things that people are concerned about. You know, if it's a legitimate concern, the market would be already reacting to it. By the time everyone's talking about it, it's almost, if not, or at least halfway through, or already done. But other than that, honestly, I don't know what kind of effect. It makes sense. Like, I get it. The big NASDAQ names, their market cap gets too big, and there's rebalancing that needs to be done. I don't know how big of an effect that's going to have on the overall market. I have no idea. Honestly, no idea. I mean, I can make it into a bearish case, without a doubt. But that's the easy part, just like liquidity and everything else. I don't know. But when everyone is concerned about it, and I see the market doing the complete opposite, you know? So, that's my take. That's my take. And the same thing, and just so you understand, I'm looking at all that stuff too. I'm always interested in being aware of all that stuff. Okay? But the stuff that really starts to get me concerned is the concern that the wrong people care about. I'll give you an example, okay? The banking SIVB demise, all right? Again, social media, run on banks. Who's the next bank? This is 2008 all over again. Oh my God, right? It was all over the place. For good reason. It sure looked that way, okay? But while that's going on, you had the credit markets, our credit signals signaling it's no big deal. You had Sharpies, which are quote unquote the smart money in the futures market, aggressively adding to long exposure. Now, again, think of it logically. If this was 2008 and this was a potential bank run and systemic, wouldn't they be putting hedges? Wouldn't they be hedging? Wouldn't they be taking down their long exposure? They literally, I kid you not, and now I can show you because I'm sharing my screen. They literally aggressively hedged into SIVB going under. Right here. Right? If that was an issue, they would have continued this. Okay? This is when they get concerned. Okay? So that's when I start to worry about stuff more. Okay? When the market and the regular guy out there is not concerned about something, but the smart money signals are telling us they're concerned. But when the opposite happens, that's the time there are always things to be concerned about. When it's the wrong crowd that's concerned about them, you don't need to be concerned. That's usually how it works. And by the way, when the sharp money was adding into SIVB going under, okay, you know what everybody else was doing? The complete opposite. Hedge funds were aggressively shorting into SIVB going under. SIVB happened, hedge funds aggressively shorted from that week, every single week after that. They took the other side. Okay? Retail, people like us, were fleeing into money markets and safe haven assets at a rate that you rarely see because concerned about a bank run or whatever the case. Guys, I kid you not, that SIVB event was the most bullish thing that could happen. Can you believe that? Do you guys realize that? That was the most bullish thing, in my opinion, that could possibly happen to equities that you could come up with at that point. As a matter of fact, I think, and call me nuts, if that regional banking situation didn't happen, I don't think this market does what it's done. I kid you not. Right? Because you had the Fed, you got the Fed scared, you got the Fed to react, you had the Treasury react, they bailed out the banks. Everybody thought, no way, they're not going to do that. They don't care about these banks, they're not bailing anybody out. That was the most bullish thing that could happen. That's how crazy this market is. That's how things work. You can't try to make common sense out of things. It's impossible. Yeah, Mark, it is. It's a casino. Don't let anybody tell you otherwise. It's a casino. It's a casino. What do you think? When you can buy something that expires the same day, that's a bet. That's straight out gambling, right? Like I used to use that line when there were weeklies, right? When you can buy weekly expiration options, like what are you telling me? You're investing? That's a flat out casino action. Now they expire the same day. Yeah, and this is the same way, right? I mean, if you don't use your head a little bit, right? And that's the difference between trying to approach this game in a professional manner or feeding into the casino approach, right? If you're going to roll the dice and try to make a score in same day expiration every day, you're going to, exactly what you just said, you're going to, what would happen at the slot machines or the crap table or whatever. Eventually you're going to lose your money. You know what I mean? But you're 100% right, Mark. It's a casino, and it's a waste of time to try to handicap it with logic. Impossible. And you know what should make you feel better, Mark? There are a lot more intelligent, more market savvy people with more resources than us that can't do it either. So don't feel bad. He could do it in bull mode. You know what I mean? Again, go listen to an interview with Drunken Miller, who's known probably as the best out there, right? And that's what you will take away from it. Mike Wilson, yeah, see? And that's what happens with these these predictions with conviction. Okay? Tom Lee was hot, right? Was the hottest thing in the world off the COVID lows and into that bull market, right? Then Tom Lee got trolled like I never seen before throughout 2022. Mike Wilson became Tom Lee, right? Everyone, Mike Wilson, Mike Wilson, Mike Wilson. Now, Mike Wilson's been fighting the tape, right? He's getting trolled, and now Tom Lee is back in favor. It goes to show you that, these big major predictions, they're sexy, they draw people to you, but it's a waste of time. And that's why, and don't get me wrong, like I said, when you're in full-fledged bull mode, especially when you got the QE at your back, you want to get a little aggressive and try to forecast and predict, because you get rewarded for that, right? But the market we've been in, and again, I'm using that same line over and over, and I know you want to throw a rock at me, but you want to be able to react to what's going on instead of predict. Because the predictions, you can get dead wrong and they can destroy you right now. Destroy you. If you thought things were going to be bearish, and listen, I did. I'm not saying I'm any different. I wasn't expecting the Fed to hit the brakes and AI enter the equation and no recession. I thought the economy would be in shambles at this point. If you talked to me a year ago, I'd be the first to admit it. You know what I mean? But the difference is, I'm not going to get short or continue to short all along the way and keep doing it while everything is telling me the complete opposite. That's the difference. That's simple. Okay? I'm not saying you have to be the opposite, right? If you were cautious and now that cautious scenario is not playing out, I'm not saying you have to be aggressively bullish. You can't approach it cautiously bearish, right? You try to take a conservative approach and be a little bullish, right? That's the difference. And then you're going to see when things line up your way, right? When you see things, you have a little conviction about it, and then you get confirmation from market signals that that's playing out. That's when you make your big scores. That's when you make your big scores. When things line up the way you thought they would, and then the market confirms that thesis, that's when you get aggressive, and that's where you make your big money. But the trick is you never want to build up that bias, and then when the market's telling you you're wrong, you take the approach, no, I'm right. This doesn't make sense. Because the market will beat the living piss out of you. And everybody's wrong, okay? All those guys you're mentioning, right? Wilson, nobody thought he would ever be wrong again. He was wrong. Guess what? Tom Lee, everybody loves him again. He was dead wrong in 2022. Okay? Dead wrong. Right? Cathie Wood, right? Tom Lee did what Cathie Wood does. Oh no, keep buying, keep buying, keep buying, keep buying. If shit did end up hitting the fan, right? Anybody who followed Tom Lee would have been put out of business. A la 2008. That stuff sells, okay? When you don't play with real money and you're looking for customers to attract eyeballs, it pays to do that, okay? in general, right? If I was one of these CNBC guys that I just wanted to go on there and attract eyeballs, I would just be uber bullish always. Because the market goes up more than it goes down. So I would be more right than wrong. And when I come out there and pound the table, buy, there are going to be times that people think I'm a genius. That's Tom Lee. I hate to tell you. Right? That's Kathy Wood. That's Tom Lee. Plain and simple. Now, Kathy Wood's a little different. She's managing portfolios longer term, blah, 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 blah. But you know what I mean, the rhetoric. Right? The rhetoric. Yeah. And the difference, though, with Hartnett, right, is that as he's wrong, he's telling you he's wrong. You understand? That's the big difference. He's not telling you, no, I'm right, I'm right. He's telling you that he's wrong. You understand? Like, he made the call that there was going to be another leg down in the market, blah, 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 right? And as positioning came in, he had several updates where he would be like, listen, they're too bearish. Everybody's just still too bearish. It can't happen. The market's not going to fall apart with everybody this bearish. You know? So even though he had a thesis, a conviction, a bias, you know what I mean? He knows when he's wrong. He's telling you where he's wrong instead of being like, no, it's going to crash, just hang in. You know, that's the difference. Yeah, he'll adjust. He's real. That's what people like Hartnett. He's real, you know? And also what he does, he tells you the other side if it doesn't go his way. In other words, like he made the statement, if it was, what was that credit event back in the day? Oh, Jesus, I'm drawing blanks all over the place. But in other words, he was saying, if this is the bear market of so-and-so and SIVB was it, then I'm dead wrong, and those October lows are going to hold for longer than anybody thinks. Right? So he tells you, like, listen, if I'm wrong, this is what's going to happen, so pay attention. Don't listen to me. Yeah, the other guys are different. They have to do that. They gotta stick to their thing, you know. And then what you'll see, what they do is they nonchalantly adjust, right? Almost when people forget about them, not when they're being talked about continuously. Like when people start to forget about them, they adjust and they start making new calls, and then people forget about the old calls. That's what happens. Oh yeah, McElliott's a whole different ball game. You know what I mean? McElliott's a whole different ball game. These aren't analysts, though. You know, they're different. I agree. And Mark, the thing too, and you know, I try to make a note to you guys because I like these guys just as much as anybody. You look for two things. You look to learn from these guys because they know their shit. They've been in the game. They got experience, right? So you look to learn from them, and you want them to make you aware of things you wouldn't be aware of. But the last thing you want is for them to help you build a bias. You know, that's what too many people do. They're bearish to begin with, so they want Hartnett's agreement with their bearish case to solidify what they're seeing. You understand what I mean? And when you build up a bias like that, it's impossible to break. Impossible. It's impossible to break. You know? Again, one of the reasons, there are many reasons, but one of the reasons that I don't even bother on the short side, God honest truth, Okay? Because one, the market net overall goes up a hell of a lot more than it goes down. Okay? So the few times that I can make money on the downside, I'm more worried about the damage it's going to do to me psychologically than the money I make off that one instance where it paid to be bearish. It's not worth it. Okay? The way I'm wired, for me to flip from an extreme bearish bias to bullish, it's not easy for me to do. I can't lie to myself and say, oh yeah, I like to do that. It's hard enough to get bullish when you're cautious in cash. You know, let alone extremely bearish and then you need to, cover shorts and get long. Impossible. Yeah, seriously. You know what we need? We need Zero Hedge does a good job. That Hindenburg newsletter does a pretty good job. You almost need like Cliff Notes for him in English, right? You know what I do, Mark? I got to read his shit 3-4 times minimum, and then something finally sticks with me. Like, oh, I see it now. Honest to God truth. It's never just once. Never do I read it once and I'm like, oh, look at that. Never. It's usually by the third time I'm like, wow, I get it now. It's like a riddle. Yeah, he's too smart for his own good. And it's in his lingo, his language is Yiddish, right? It's like foreign. Like, he can't, even normal conversation, a simple conversation like he's going on vacation because he needs a break, he'll word it to where you can't even understand what the hell he's saying. Barry's like that too? Yeah, I guess that's the way, that's what they do. Barry's a smart dude too, That's what they do. But, Barry too, and that's what, again, making calls, that's another thing, okay? Listen, you're playing this game just for yourself, okay? Don't worry about letting everybody know what you're doing, what you need, what you're holding, okay? If it affects the way you're trading, keep it all to yourself. I know so many people that they tell people that they're short and, they don't want to admit they're wrong to everybody, so it ends up costing them more money. That's ridiculous. You're not some public figure. You don't need to do that. Me, I'm superstitious. I hate when a lot of people know what I own, because every time that happens, it never works out. That's superstition on my part, But, making calls, and the reason I bring that up, Barry came on Twitter, and I forgot the way he worded it, but basically looking for the market to crash. And then he had to come back on Twitter to make it known that, listen, I'm getting long now. You know what I mean? Like, he had to go out of his way and let everybody know because he made that call publicly. Right? And you saw in his filings. Right? He was all bearish. Meanwhile, he was bombing stuff on the long side. Yeah, listen, everybody's different. Okay? Everybody's different. But I'm telling you guys the truth. Me, superstition has a lot to do with it. Call me nuts. I'm a superstitious guy. Sports, the market. Anytime, always, even when I was managing money with clients, anytime everybody knew about the name I had a big position in, whatever, I just had a feeling in my body like, oh, gee, I'm fucked. I just knew it. Before even the stock did anything, I knew it. I just knew it. I for some reason, always, if I bet the ball games, okay, if all my friends knew who I bet and we're all watching the game, it was always a loser. Always. I don't know why, but it was always a loser. And then when I kept it to myself, I didn't tell anybody. I'd cash a ticket. It used to always work out that way. But if I had big money on the game and everybody knew what side I was on, it's almost like they put the evil eye on you. You know, you can understand. I'm Greek Italian. That evil eye. We believe in that shit. Oh yeah, he's got a horseshoe up his ass too. You know, think about him, right? He's bearish. He's got a bearish view on things, but at the same time, he knows, right? He even made the comment. Based on sentiment and positioning, I can't be as bearish as I feel. No matter how bearish I am, everybody's bearish. So what's he do? He gets long a few names, and he happens to step in the AI shit. You talk about horseshoe up your rear end? That's Drunken Miller right there. Right, I'm defensive. That was it. I'm defensive. And he figures he's buying defensive tech names, and they happen to be AI related a couple months later. So he was defensive, and he made more money on the long side than if his bearish thesis played out. Unbelievable. Mark, I'm telling you, maybe I'm nuts. I'm a big believer in it. Something about it. Again, I don't know. Maybe people are rooting against you deep down inside. I don't know what it is. But when everybody knows what you're relying on, it always turns sour. Always. I don't know Wild Disease. I know he's a big AI fan. He thinks it's legit, and he was very cautious. So he needed to get long something. He was too cautious to really get aggressively on the long side. He wanted to be defensive, and he bought NVIDIA and a couple other big AI plays. Yeah, I mean, think about it. Even before AI, right, we would see from time to time some of these larger names catch a bid almost like a flight to safety. The AI thing, like Sahil said earlier, was just like an injection into the whole thing. AI saved tech, right? Let's be honest. It saved tech. Who the hell saw that coming? No bear saw that coming. Yeah, look at the timing, right? See, I'm telling you, that SIVB, that time was the most bullish thing that could happen to this market. It's incredible how that worked out. Between the Fed, the Treasury, and like you said, AI. Those three. Think about how powerful that is. Right? This is what happened with like what Sahil's talking about with AI, okay? Look. Here's SIVB going under, okay? Right here. So the market is doing the normal thing, right? Trending lower here. Okay, looks like it's going to roll over, break down. SIVB goes under. Okay, the Fed, Treasury, this happens. And like Sahil just said, AI catches fire. Right here. It sticks out on the chart like a sore thumb. Right? Look at the Fed balance sheet up until that point there. Even off the October lows. That's what I'm saying. This here is the most bullish thing that happened. This was all based on sentiment and positioning. The market found a floor because everybody was so bearish. This was the kick in the ass. This was the kick in the ass. Off that. Everybody who was short here covered, and then they started legging back into shorts aggressively into this low, and the Fed did the opposite. You see, right? You see, Mark? Now you're telling me what? That he didn't have, luck didn't have anything to do with that? Honestly. You don't think luck had a big piece of that? Yeah, Drew, right? AI's it'll bite us all in the ass in the grand scheme of things. In the grand scheme of things, AI is gonna be what takes us all down. So listen, that's the story, guys. All right. I mean, sometimes I know some of the things I say you don't like to hear them. They may not sound professional, but this market, people think it's like how much you know. The more you know. The game doesn't work like that. The game doesn't work like that. When everybody knows and sees the same shit, and they're all positioned for that, and it's one thing that it doesn't come to fruition, but almost always the total opposite happens. I don't know how that happens, but it almost goes that way all the time. I don't know how. Things just, like we said, comes into the picture. AI, SIVB goes under, ends up being a good thing. No one could predict that. Inflation up, rates up, stock should be down, but it's crashing up instead of doing the normal thing, selling down. Yeah, and that all stemmed from positioning. I mean, you remember, right? The tech stocks were highly correlated to rates. Every time rates went higher, tech stocks got killed. But what happened was everybody had that playbook. How long is the market going to stay that easy? You know what I mean? Everybody had that playbook. Everybody knew that. That's what it comes down to. And, so you understand now my concerns here, okay? Again, not that I think it results in a crash or a start of a new vicious bear market. A lot of the stuff that added support to let this at the least hold up. See, what we had based off positioning sentiment, this floor, there was a high probability that this floor would hold. Okay? We needed other things to happen for this market to go higher. But based on sentiment positioning, there was a good chance that this floor would hold. That stuff is gone now. Okay? Like I said, doesn't instantly translate into something bearish, but if bad things happen, just like good things happen along the way here, if bad things start to happen, you don't have that support anymore. That's the big difference here. I know the world is crazy and never would be. Oh yeah, I wouldn't be. That wouldn't surprise me one bit. But that's the risk in the market. These unforeseen things, right, that show up that are unexpected. That's the stuff to be worried about. That's the whole point of this conversation here, okay? If something new, like you're saying, a black swan, that's what a black swan is, right? Something that happens that's unforeseen, okay? Unexpected. If something like that shows up now, there could be problems. If that showed up here or here, there was likely not going to be any effect because everybody was positioned for a black swan. You understand what I'm saying? So that's exactly my point. Earth is the point I'm making here. You understand? If your hunch is right and something unforeseen enters the picture, there's legitimate risk where there wasn't in October. There wasn't off SIVB. Okay? And what I think, and here's where I think our edge lies, okay? Let's say Earth is right? Let's say something unexpected does happen. Okay? Let's say something remotely close to a black swan shows up. Whatever it may be. God forbid, terrorist attack, China does something, Russia, who knows, right? There's a ton of balls in the air, okay? This is ultimately what is going to tell us if that black swan has teeth or not. Okay? That's simple. If something happens and you see this blowout, that's the credit market signaling to us there's a problem. You understand? And believe it or not, now, because there's less bearish positioning out there, people might not see it as a problem. People might think, oh, let's buy the dip like SIVB or like that, right? Let's listen to Tom Lee. Okay? But if the credit markets are indicating to us that they're concerned, that's where we have to pivot and be cautious. We don't have to get short, but we got to be careful. You understand? That's the difference. That's what I'm worried about, Mark. That you lose that support from everybody being bearish and they become more bullish, and you go into that late August, September, October period where, again, I don't know the reasoning behind it, but black swans are born in that period. Right? You get October 87 crash, 9/11. I don't know why. That late August, September, October period, shit always happens. Always. So I agree with you. That's the way it looks like right now. You know, the best thing that can happen, and I'll leave you with this, okay? That everybody gets concerned about September, October, and they start becoming bearish ahead of that. You understand what I'm saying? Everybody is concerned about it. If everybody becomes concerned about exactly what we're concerned about, we could get by. That's usually how it plays out. But if everybody, like you're saying, if we're still doing what we've been doing here, right? AI, tech, good earnings, whatever, and people just ignore September, October, that's when usually there's a problem. So it's going to be interesting. It's going to be really interesting. You know, August, September, October is going to be interesting few months there, see how things shake out. And listen, all of us, as long as we are prepared for it, we don't mind it either. You mind it, Mark, if you're prepared for it? You know, I'll give you an example. Let's say August, something starts to happen late August. We start to see credit blow out, right? And we're aware of it, right? You raise cash, okay? Even you get caught in a position, whatever. You made some money off the October lows, okay? But you're prepared just in case something bad happens, okay? You don't mind it. Because once that plays out, it ends up becoming an opportunity, right? So that's the difference. If you ignore it, right? If, again, our signals are telling us we should be cautious and concerned, and you ignore it, and you're just holding a basket of calls and adding into it, I mean, you could get knocked out of the game. And that's the difference. That's the difference. So, and that's why even when there's no signal from this stuff, you know, and it's because I'm looking at it, I continuously bring it and put it in front of you guys. You want to get in the habit to at least looking at it so you don't miss it when it's telling you something. Right? Because otherwise you get sidetracked, you forget about it, and then before you know it, you miss it. So that's why we do what we do. All right, I'm out of saliva. I need a new coffee, and I'm exhausted. As always, guys, I appreciate you guys coming by, talking shop. My pleasure. And enjoy the rest of the week. Tomorrow's Friday already. These weeks like this, they go by. It's unbelievable, right? They go by so fast. Tomorrow we get a Sharpie update, a legit Sharpie update, hedge fund update. So we'll see, we'll see if there's any major change there. Yep, enjoy everybody. Good luck tomorrow, and I'll see the majority of you mañana anyway. Have a good night, everyone.